Hello everybody. Based on the previous videos, the criticism that I got, it was mainly that my voice was not loud enough. So I brought some improvements. I hope you no longer find or in other words, you find my voice loud enough. So I just want to make some points that when I do these recordings, there will be no edits. It's more or less like a live. And if there are some errors or when I know it and I notice it, I try to correct them. So just to let you know that how I'm doing this for those who are interested. Um, I This video is actually uh, as a repetitive video on accounting equations, and because it was not loud enough last time, so I'm just doing it again. So bear with me. I brought some changes on the case, and more or less everything else is the same. There are small details. The details is that the name of the company is Always Right, Never Wrong Corporation, and the business starts in September 1st, and it has 12 transactions. On the right side here that I highlighted, it's the case study. On the left side, this is the accounting equations. Just as a reminder, this side of the accounting equations, all these accounts are called assets, and this side of the accounting equation is liabilities plus owner's equity. So assets is always always equals liabilities plus owner's equity. And I also put a very ordinary Excel formula. If this side of equation does not equal liabilities plus owner's equity, this turns into orange, and then it also says that it does not equal. Otherwise it stays green, and then you see this text. For example, if I put 1 here, because it does not correspond with the liabilities and owners, it changed to orange, and then it says the asset does not equal liabilities and owner's equity. So that's how it works. So these are some improvements. I hope you find it useful, and after this video, if you happen to have questions, you can leave them on comments. I'm happy to answer them. So what I've done here is that I have left the transactions numbers. So this is corresponding to this. For example, transaction number 1 is here, so that I don't have to type them. And then I left the date, and then I follow these dates. Say for example September 1st, it will come here for September 1st. So let's go and see what is this case study is about, and how it starts and how it ends. Again, the name of this company is Always Right, Never Wrong Corporation, and the acronym is AR&W. It starts a business, and on September 1st, Mr. ABC invests $25,000 in cash. So where we are putting this money in the accounting equation, of course it's in cash here. And so as you see that I've added $25,000 here, and then we got $25,000 here, but because liabilities side plus owner's equity side, we still have not um, credited the right accounts. Therefore, this has changed color, and also the text is different. So when the owner invests $25,000 in cash, the right account is owner's capital. So we put here $25,000. With that, so you see the asset side and the plus equals liabilities plus owner's equity, both sides of the equations are the same, $25,000. So that's something that I brought some improvement. I hope you find it helpful. So on September 4th, so it says, after an important meeting to make investment decisions, the company purchases equipment for cash at $6,800. That means we pay cash. That means it's minus, we basically credit cash. That means we decrease cash, and then we debit equipment. That means we increase equipment. So basically the asset side doesn't change. One side decreases, the other side increases. Cash decreases and equipment increases, and equipment is also considered asset. On transaction number 3, it says, which is September 11th, the company purchases supplies on credit. So that means when you say on credit, that means we are not paying it now, we are paying it later. So what is the amount? The amount is $2,200. And then where do we put here? So anything that we owe, it goes under accounts payable. That means we have to pay somebody, our suppliers or whoever we owe the money to. On transaction number 4, which is September 15th, what do we have? The company is a merchandise company. That means we sell goods, and it makes sales and cash for $5,500. That means we sell it in cash. That's good. And that means we debit the cash side. Our cash increases by that amount. So where do we put it? Because we are making sales, it's revenues. So we add on the revenue. So what's transaction number 5? So transaction number 5 is September 18th. And we spent money on advertisement for $580. So advertisement, what is it? Do we pay in cash or it's on credit? No, it's on credit. That means we don't pay it. So what we do is we increase our accounts payable by $580, and because it's an expense, it's minus $580. Advertisement is considered, it's an operating expense. So transaction number 6, it's September 20th. So the company makes sales for $10,000 on credit. So that means we are making sales that whoever owes us money, we put it on accounts receivable. So it's for $10,000. So it goes under sales on the credit side. So we debit accounts receivable, and then we credit revenues for $10,000. On transaction number 7, on September 21st, the company makes sales for $10,000 on credit. So we covered that one, sorry. Transaction number 7, it's September 21st. It's interesting. It's a interesting transaction that we make sales, but some of it is in cash, some of it is in credit. So how do we account for? So first of all, it makes $5,000. So let me put this, the total sales is $25,000. So then how it's distributed? So out of $25,000, $5,000 is in cash. The rest is on credit. That means the person pays us later. So we debit accounts receivable by $20,000. Transaction 8, September 22nd. So the company pays its liabilities for $580. So that means minus 80. So what do we pay it? What do we pay it for? We paid in cash. So we also need to basically put the same number under the cash. So we are not doing journal entry here. In the upcoming videos I'm going to show you that. So the way it works is that we debit accounts payable by $580 and credit cash by 580. So credit for cash means it's decreased, and this amount is also decreased by that amount. And I will explain more in the upcoming videos. I don't want to confuse you now unnecessarily. On September 23rd, the company pays its the company receives payment for its accounts receivable for $5,000. Great. So we debit cash by $5,000, and then we also should be reducing accounts receivable by 5,000, not 58,000, $5,000. Then transaction A10, it's an interesting transaction. It has multiple components, which is $700 here, $700 for salary, $1,200 for, $700 is for rent, $1,200 is for salary and wages, and $180 is for utilities. So let's put on the expense side first. So minus $700, again, just for beginners, rent is considered operating expense. So it goes under the expenses, and any expenses reduces owner's equity, and it also, we go on the asset side shortly. So minus $700, and then minus $1,200, minus $180. So a sum of it, because it's cash, we put it under cash. So this amount plus this amount plus this amount equals minus $2,080. So in transaction 11, which is, okay, date is here, September 25th. Oh, I'm sorry, I also did not put the date for transaction 10. So we receive payments for accounts receivable for another $5,000. Great, we have good vendors, good customers, they bring the money on time. So we increase cash by $5,000 and decrease accounts receivable by $5,000. And now transaction 12, which is the last transaction, which is September 30th. And then the owner withdraws money. So it withdraws money by $2,800. We reduce cash by that amount, and then we add the same amount under the owner's drawings here. So with this, it concludes our video. The few reasons why I repeated this: first of all, my voice was not loud enough. Secondly, I brought some improvements. Thirdly, I'm using this case study to do some follow-up videos, and those follow-up videos will include the 4 financial statements, like income statements, the owner's equity statement, balance sheets, and statement of cash flows, and then followed by credit debit and journal entry, ledgers, and overall the accounting cycle. Please stay tuned. Leave me any questions or comments. I read all the questions and comments, and I will try to respond to them. And thank you for watching. See you in the next video.